All right. Happy Thursday. We have a ton of speculation around the Fed conversation, and it has all been shut down again. So we got a lot to cover on the Fed. We're going to really spend almost our entire session today just based on questions, based on what you guys have been asking around the Fed and what's going on there. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news and data and trends we're watching, and especially as it relates to the Fed, hopefully weed out a bit of the noise along the way. So almost all of our conversations today is going to be around the Fed. But before I get there, I do want to touch on a couple data points that came out this week. First is actually, let's start today since it's less related to the Fed. First, today we had jobless claims come out at 222,000. Not really a big surprise one way or the other. And housing starts at 1.43 million. Same thing, not really a big surprise one way or the other. More importantly, though, we had retail sales come out on Tuesday, I believe it was, up 1.3%. So, the great news, so you've heard me say this time and time again, is that the consumer is resilient. The consumer is still spending, basically. We saw a lot of retailers, though, even with these numbers, a lot of retailers got crushed during earnings. But if you look at like Walmart, for instance, Walmart had a great report. So it's starting to become a bit more of a mixed bag, which is really interesting to see. We've talked about this all year, is that, the looming recession possibly on the horizon, likely on the horizon. And really what we've seen, though, is that the consumer and the jobs market has been strong. Retail sales was, but, retail company earnings were not so far. So very interesting to see that. As a bit of a pivot, to the Fed, Tuesday we also had producer price index come out at 0.2% versus 0.4% expectations. So another data point on the inflation side of things where the market really ran with this and said inflation's not as high, the Fed's going to back off. And here we go again. Like it's like we don't learn our lesson here. But basically, even with all that, go back to last week's CPI, this week PPI. But then on Wednesday this week, we had Fed chair members speak and say basically, again, we've told you that we're not done yet. We are not nearly done yet. Today, we also had another Fed chair member come out and say we're not done yet. So the Fed, we keep getting in this like push and pull with the Fed where the market gets excited about a data point or two. The Fed comes out and says, no, we're not anywhere done. We haven't voiced that we're anywhere done. But as a constant reminder, and then we see this kind of like, simmer back to where things are a little more settled. So don't get me wrong, it's great to see the markets pick up, but I think that we're going to be in this up and down period for a while, and it's going to be almost entirely hinged around the Fed. So coming up, and the question of the week is really about the Fed, so that's where I'm going to spend a lot of time here. But coming up next week, we do have the Fed minutes, so we can break down this myth of what I'm sharing and really share some actual details around this next week. But we do have the Fed minutes next Wednesday. And then, of course, it's Thanksgiving Thursday. So I hope everybody has some exciting Thanksgiving plans coming up here. But before we get to the holiday, we have a great question of the week. Again, entirely themed around the Fed, which is actually from Fred, which is, will the Fed hike rates? So this is obviously on everybody's mind. We've got the December meeting coming up. Bear with me a minute. Coming up on December 13th and 14th. So we've still got another month or so to go. But the Fed meeting and decision is coming up pretty quickly. And the question, of course, is what is the Fed going to do in December? Now, let me be very clear. I do not have the crystal ball, but I think that just like the last couple meetings, the Fed has been very clear what they're going to do. I think that the Fed is likely to slow the rate hike, but not stop. So we've seen the 75 basis points they said they were going to do. I think it's likely we see 50 basis points in December. And again, because they've told us that time and time again. And again, they keep coming out this week saying, we're not done hiking. We're not done hiking. But I think that there's two very distinct differences to be clear of, right? The first is just because the Fed slows their rate of hiking does not mean that they're done. It does not mean that the economy is just going to like lift out of this thing and cheap money is back on the horizon. 50 basis point hike is still pretty aggressive. Okay. So I think that's really important to understand. Everybody's getting very excited about the potential that the Fed slows their hikes. The slowing of hikes is still really to tighten the economy. So it's still a negative impact as far as, looseness of funds, basically. Obviously, the hopes is that it reduces inflation, which longer term is going to be a great thing, right? But that's really important to note. So I think that it's really important to break that apart. When you hear the Fed slowing, again, it's not that they're stopping. It's that they're slowing how quickly they're raising rates. Very, very different than saying the Fed is going to stop. I think that the Fed's voice that maybe sometime in 2023 is where they explore that, but they're not. We'll find out what they say in December, but they're not there yet. They will voice, I think, when they're going to start exploring stopping their rate hikes. And because it's far enough away, they haven't even really shared that. So I think that's really important to understand that distinction there and really make sure that, we don't get too wrapped up in thinking that a slowing is just going to like let off the handcuffs, right? Very, very different story there. So great question. Thank you, Fred, for submitting that. And again, the biggest thing to answer the question more directly, I believe that the Fed will do 50 basis points in December, possibly another 50 in January, but I don't want to go out that far. Let's just start with the 50 in December. Let's see what they share in December and then kind of take it from there. So thank you so much for the question. As always, if you guys have questions, let me know. You can just send me a message or comment below, and I'll do my best to answer them in our coming weekly updates. In the meantime, have a great upcoming weekend. I will be back next week for our weekly webinar, but in case you don't catch that one, have a great Thanksgiving next week as well. All right, have a great day. We'll see you next Thursday at 3.